Okay, this is going to be a really short video. Basically, I just want to get started. I've got a trading algorithm which I want to present to you guys. So why would you be interested in this algorithmic trading program that I'm showing you? Well, first of all, I want to set the target. So the person that made the most money ever in trading is a guy called John Simons, and he ran a company called Renaissance Technologies. Now, John Simons originally was a mathematician, but he strongly felt the market was not operating according to rules that economists were saying it did, and he felt like there were mathematical solutions to the market. As opposed to perfect competition, he felt like you could extract a great deal of wealth from the market. And to make a long story short, he did exactly that. He, over 20 years, managed to extract over 66% return from the market. And he was managing a large investment fund. It meant he made hundreds of billions of dollars. Just an enormous amount of money. So, and by the way, it should red flag you when you hear people going, oh yeah, I made 10,000% or 1,000% or 20% per month or something like that. These are phenomenal figures. Now, it's not impossible. You can do these kind of returns, but if you can do it consistently and scalably, you're talking hundreds of billions of dollars for exponential reasons, which I will explain in a later video. Now, Warren Buffett was also around the 60% mark on his personal fund, and then when he started trading with a larger fund, a managed fund, it dropped to, hold on, 20.5%. George Soros, his fund was averaging 32% a year. Stephen Cohen, he was averaging 30%. So these are the big, huge, high-performing trading firms. Now, my goal is to hit 30% with my trading algorithm. And my trading algorithm is a set and forget thing. And so if it pulls it off, and it's trading on the Forex, which is the biggest market in the world, if it can pull it off, we're looking at very high levels of return. Now, the second reason that I'm hoping you might be interested is trading algorithm was built on the principles from my PhD thesis. Now, this is a book that came out of the thesis. This is an academic book, and I'm not recommending you buy it, largely because it's academically priced. It's quite expensive. I make no money. I think it's 40 pounds or 30 pounds in the UK. But the principle of this book undermines the foundations of mainstream economics, which is why no one accepts it. I can't get a job in academia. I cannot get published. No one wants to know. And I was thinking, well, how can I get heard? If I can't get published, no, and I can't teach, well, not my interest, how do I get heard? And I thought, well, what's the biggest megaphone in society? Well, you make money. You make a lot of money, and people suddenly want to know. So, thus, the trading algorithm. So in tests, my algorithm is, I don't know, this is a bit difficult, but it's matching the medallion fund or thereabouts. But my first goal actually is going to be 30%. My first goal is to get a 30% return over 1 year. Now, I presented this algorithm to an investment banker on the recommendation of someone else I knew, and it didn't quite work out. What he said was, well, how do I know you don't have 100 of these and you just pick one that worked? And showing it to me. Well, okay, fine. There's nothing to say I didn't do that, but I didn't do that. But so what I'm going to do is, this is the basis of these YouTube videos, I'm going to show you the trader live. So I'm going to be reporting the changes in equity at least weekly, maybe even more, but at least weekly. It's getting darker now. These algorithms are linked up with an international broker called FXCM. Now, FXCM.com, if you want to look it up, they have two different types of accounts. One's a demo account, one's a live account. Now, the live account has real money in it. The demo account has virtual money in it. Other than that, everything is identical, including the fees and the interest and et cetera, et cetera. All the expenses of running an account, they're all in there. So I'm going to be reporting on the account at FXCM, and we'll be doing it live. So I'm not going to be showing the exact trades per se, because actually it trades quite actively. We'd be here all day. But I'm going to show you how the equity is climbing, and I will be talking about the algorithm, and I will be talking about the principles underlying it. I have 3 different accounts right now. All on the Forex, and the Forex are currency pairs, which kind of makes sense because, for example, if you buy British pounds, you have to buy British pounds with another currency. So say it's the US dollars, British pounds, US dollars. And so then you have a ratio. What's the British pound worth in terms of US dollars? And so you have a pair. And so 2 of my algorithms are running in the British pounds and US dollars, and that's the one where I tend to make the most money, so I'm going to be doing a lot of that. And I've got 1 other running on the euro and US dollars. Okay, the first account is been running for 1 week. And it is a brand new British pound USD account. It's doing okay. Well, I don't know how it's doing. It's only 1 week. We'll see how it's doing. It is showing a profit. Now, it does tend to go up and down, and it looks like this. This is what the profit graphs. Here's 3 different profit graphs. And as you can see, they're a bit all over the place. However, it's supposed to go work its way up like a ladder, up and up and up and up. So we might lose some money next week. We might actually end up in a loss because we're quite close to the original profit line. But over time, which I will be showing you, it should be climbing. And if it doesn't, then I've failed. The algorithm has failed. So this one's been running for 1 week, and this is the statement from that account. And as you can see, it's made some money. Now, the second one has been running for 2 weeks. It's a euro account. The euro typically doesn't make as much money using my algorithm as the British pounds, but it does make money. And here is this statement for 2 weeks. And this is at the moment, well, since the coronavirus. The coronavirus made the markets go completely insane. And I was close to 100% on one of my trading accounts, and then the markets just completely went wild and the algorithm couldn't deal with it. If I was trading real money and I saw that kind of volatility coming, I would have just bailed from the market and taken the profits. And so, well, it was around 80%. But you don't have to take my word for it. This is the statement for the last 3 weeks of this particular account. This is British pounds and USD. And you can see the numbers. You'll see these are going to be the same accounts I show week after week after week. The longest running one we'll call the British pound 1. And then we've got the euro, and then we've got the British pound 2, which has been running for 1 week. These are the only accounts we're going to be following unless there's one more I fire up as an experimental. I've got 2. The British pound is the British pound 2 is an experimental. I've got a 4th one that's not running right now, which I also use in experimental. So we're going to assume the live money right now is in the British pound 1. So we started with this number here, and it is now that number there, which I can't remember, but it'll show up in the screen. And yeah, next week I will report where it is. Now, the extra stuff is I am going to be talking about the principles underlying these algorithms because they address economic theory in general. And that's what I really want to get to. Ultimately, if I make money from this algorithm, either directly on the market or I sell it, I might sell it to a bunch of people. I might do it through a Patreon account. I might do it, try and find a single big investor, assume it all works. What I want to do is build a school. Now, I don't want the school to be part of the university system, which is for reasons I will also go into later on. But for now, that's my ultimate goal. That's my ultimate goal with this whole trading algorithm thing. So I want to build a school, and I want the theory to get a fair hearing. If you got this far, thanks for listening. Hopefully I'll see you next week at some point. We'll see how everything's doing, and I'll tell you some more about the underlying theory that built these models and why I think they're relevant. The main evidence I have that my theory has relevance is the algorithmic traders. So if you're interested in algorithmic trading or economic theory, I'm also going to make some comments on the news, because the news really needs some comments. And a lot of the time I'm going to be talking about narratives too, because there is a lot of narratives in society right now, and they're not helping us. I mean, okay, let me rephrase that. Narratives are important to human beings. We need them in order to navigate the world, because otherwise there's just literally too much information, facts and things out there. But if you allow the narrative to push out reality, you will end up in a bad place. And that's exactly what we've done. And in a lot of areas, but especially economics, which is largely why I'm here. Yeah, and I hope to see you next week.